What's up, guys? Welcome to A Reseller's Life. This is part two of our reseller finance segment with Mark II, a certified CPA. Mark, if people are just tuning into this episode only, who are you? What do you do? And where do you live?
Yeah, Mark II, I'm a CPA that specializes in e-commerce and resellers, and I am based in Utah, and I have a small reselling business of my own, so I'm ready to talk about some deductions.
Awesome. In this episode, we're going to talk about the 6 major reseller tax deductions. And Mark also has a new course on reseller tax, which is available in the link in the description below. If you're watching this in January, there's a big discount on it. Make sure to use the affiliate link below. If not, you're watching at a later date, use code Daily Refinement for a special discount on the course. And that goes over all this information. It's a no-brainer for people who are serious about building a reseller company. But let's go straight into it. This is the big one, inventory deduction. How do people handle this?
Yes, I mean, if you are a reseller, you're selling something, and that something is your inventory. So that's generally going to be your biggest deduction that you have. So when you deduct your inventory, it's deducted in the form of cost of goods sold. That's what it's called, or that's what the deduction is called. And historically, retailers have been required to deduct their inventory when they sell it. So not when you purchase it. That actually changed just last year. So it became with the tax reform, it became acceptable in some circumstances to deduct your inventory when you purchase it, which is referred to the cash method of inventory. But typically, I still recommend that people do it the historically required way. So using the accrual method for inventory, which is deducting it when you sell it, because that just gives you a better representation of your true profitability, because you're matching those expenses to your sales, and it just looks better. It's for better decision making and stuff like that. So I know I went over that quick, but that's kind of the quick overview of inventory.
Yeah, that is a tough one. So basically, when you buy something, do you record it then? Or do you record it when you actually sell the item, which is more accurate because you can kind of get an idea of the exact item. And that's sort of important to understand which way you're going to do it. Are you going to do a cash basis or accrual basis? You're going to pick and just stick with one way of doing it. That's a great question for your CPA. But number two, let's talk about home office deduction and maybe the big fear of being audited.
Yeah, so this is a really cool deduction, especially for resellers, because so many of us work out of our homes, or at least start out of our homes. And if you have a space, it doesn't even have to be an entire room. If you just have a space that you use regularly and exclusively for your business, then you can take advantage of the home office deduction. And there are two different methods that you can take advantage of or choose from. There's the simplified method, which is simple. It's based on square footage. You can deduct $5 per square foot up to 300 square feet. So there's a max deduction there. Or you can use the traditional method, which has been around longer, and that's also based on square footage, but then it takes the percent of your office to your home and multiplies it by your shared expenses, like your utilities, your rent or mortgage interest, your property taxes, depreciations in there. So that one can be a lot bigger in some circumstances. It depends where you are. You want to use whichever one is more beneficial to you.
Yep. So, I mean, it's great to have even a small business of any kind to take advantage of this. It's awesome. It's really a good way to minimize your tax burden.
Yeah, and one other thing on that, the cool thing for resellers is, so some people, if you use your living room or even a bedroom as your home office, it might not qualify because you're not using it exclusively for your business. But if you store, you can take the home office deduction for your inventory storage. So if you have space in your house where you store inventory, even if that storage area doesn't qualify for the exclusive use, it still counts. So your inventory is the exception to that rule, which is a benefit to resellers.
So let's talk about auto deduction.
So with auto, there's two different methods you can choose from as well. So a lot of us are driving around sourcing inventory, racking up a lot of miles in our cars, and you can deduct those business miles that you're racking up. So any business mileage will be deductible. For 2020, you get 57.5 cents per mile. So it's important that you track your mileage. Or, maybe you have a lot of new expenses on your car, like you got new tires or you had a bunch of repairs. You can deduct those actual expenses if you choose that method. So you can deduct either your mileage or your actual expenses. So you have to choose one, and again, whichever is more beneficial is what you should go with.
If you follow the teachings of my channel and buy a Prius, the mileage deduction will always be higher unless you have something terribly goes wrong with your car. Um, but yeah, that's great because maximizing that's really important, especially since there's a lot of road warriors going from clearance to clearance or thrift to thrift. Auto deduction is important. Let's talk about cell phone and internet, and then also maybe the utilities at home. Are those partially or fully deductible?
Yeah, so that's a good question. The utilities should be incorporated as part of the home office deduction.
Mm.
But since cell phone and internet, internet is newer. The internet came after the home office deduction existed, so it sort of exists outside of what the
Mm.
IRS considers as utilities. But if so many of us are using our phones and our internet for reselling and in our reselling businesses, you can deduct the business portion of those bills basically, and use those as deductions. So if you use your phone 50% of the time for business, then you can deduct 50% of the cost of the phone and 50% of the bill. Same with internet.
Okay. Now let's talk about something that's maybe not so commonly spoken about, which is the qualified business income deduction.
Yeah, so this is one, it's not necessarily specifically related to a reselling business, but if you have a reselling business or any type of self-employment income, this is something that was new as of last year. And it's basically a deduction that's worth 20% of your business profit. And then it's deducted on the face of your individual tax return. And that'll be true for most of us. There's a lot of different phase outs and income thresholds, but for most of us, this will be true. So if you have a $10,000 profit in your reselling business, 20% of that is $2,000, and that $2,000 is going to be a deduction, not against your business income, but against the other income that you have on the face of your 1040 tax return. So you don't need to be an expert about it. It's just something to be aware of, so that when you do your taxes or when somebody else does your taxes, you can look for it and just see that it's on there to make sure.
Okay. Now let's talk about the common selling deductions that just happen with every single sale. Maybe and this is there anything in addition to shipping, platform fees, VA or contractor help? Are there other deductions that are commonly associated?
Yeah, office supplies, like
Mm.
really any expense that you incur in the course of your business is likely going to be deductible, either partially or fully deductible. If it's the IRS says if it's ordinary and necessary in your business, then it's going to be deductible. And if you're not sure, you can check on it. But yeah, like shipping, PayPal fees, Amazon fees, all that stuff is absolutely 100% deductible. If you have contractors or virtual assistants, that's all deductible as well. So I would just assume that it's deductible, and well, maybe don't assume everything's deductible, but like there's some tricky things like donations that aren't necessarily deductible, but in general, if it's for the business, plan on deducting it.
Okay. And then finally, let's address the faux pas of should you just buy things to get a tax deduction or to avoid going into a different bracket? What do you think on the purchasing at the end of the year or whenever?
Yeah, I'll have a lot of people ask me if they should go out and buy, I don't know, spend their excess cash on whatever at the end of the year so they can avoid paying taxes. And you should only do that if it's something that you were going to purchase anyway. Don't just go out and buy a bunch of, I don't know, iPhones or whatever for your business just so you don't have to pay taxes. because that's actually, I mean, that'll reduce your tax bill, but then you're not going to have any of that cash left over. So yeah, it's actually more cash out of your pocket if you follow that strategy. So just only purchase things that will actually benefit you in your business that you would have purchased anyway.
Awesome. So, guys, those are the most common tax deductions for resellers. Mark also has a course that is having a really awesome launch sale right now during the month of January. So, check it out in the description below. And, Mark, where's the best place for people to find you?
My website, notyourdadscpa.com. You can follow me on Instagram at notyourdadscpa, or you can come join my free Facebook group, Accounting for Online Sellers.
Awesome, guys. This is part 2 of 3 of our reseller finance tutorial. So I appreciate you guys' time. Until next time, make progress daily.